Welcome back to TechKidFX for another Fetch AI price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Fetch AI chart, which at the time of this recording is holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. We have also continued to obey the Elliot structures, where we had been seeing a bit of a breakdown to the lower side in the formation of these larger Elliot count 2 in a move that has managed to get into the minimum retracement area, which lies between the $0.3297 mark and the $0.272 mark, in a move that has now given us a low at around the $0.2938 mark. And I believe that we have bottomed out in the formation of this wave 2, and whatever we are seeing at the moment is the start of an impulsive wave to the upside in the formation of this wave 3. And before I get further into the technical analysis to give you the short-term scenarios and also sketch out my target areas to the upper side in the formation of that wave 3, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that after making our lower low at around the $0.0525 mark, we started this massive bounce to the upper side of being the Elliot structures, where you can see that I have this Elliot structure in yellow, having that as the first wave, then a wave 2, a wave 3, a wave 4, and then a wave 5, giving us a peak at around the $0.6125 mark. And after seeing the formation of this 5-wave structure to the upper side, we completed an even larger Elliot wave count 1 to the upper side, and whatever we expected next after seeing the formation of that first wave was a corrective structure in the formation of that wave 2, and using the Fibonacci's connecting them from the low of the first wave to the high of that wave 1, that gave me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, which is a target area that lies between the $0.3335 mark and the $0.2676 mark. And after fully maximizing our target area in the formation of that wave 2, I believe that whatever we are seeing at the moment is the start of this impulsive wave to the upside in the formation of this wave 3, and sketching out a target area to the upper side in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gave me a minimum target area to the upper side in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.1634 mark, and that is the minimum that I'm expecting that wave 3 to the upper side to do. And in the formation of that wave 3, I'm also expecting to see a 5-wave structure in formation within the formation of that larger Elliot wave count 3, having the wave 5 fully maximizing our target area at around the $1.16 mark, and also giving us the high for that wave 3 to the upper side. And I believe we are seeing such a scenario here on the Fetch AI chart, and that is better seen here on the 1-hour chart. So jumping to the 1-hour chart for further analysis and also give you the micro Elliot wave counts that I'm expecting to see within the formation of that larger Elliot wave count 3. Here on the 1-hour chart, you can see that down here, this is where we made our low in the formation of that wave 2. Then we started this massive run up to the upside, giving us a peak at around the $0.4848 mark and giving you a measure from that low. And you can see that the market was up by more than 62.77%, which is a very nice bounce to the upper side. And that movement to the upper side has been obeying the Elliot structures, where I'm terming this whole structure to the upper side, giving us a peak at around the $0.4851 mark as the high for that first wave to the upper side. And after seeing the high for that first wave, we started a corrective structure in the formation of this wave 2. And once we fully maximize our target areas to the lower side in the formation of this wave 2, then I'll be expecting another massive run up to the upside in the formation of that wave 3, then expect a wave 4, and then push even higher in the formation of that wave 5, and getting to see whether the second wave has done the minimum that we expect a second wave to the lower side to do by connecting the Fibonacci's from the low of the first wave to the high of that wave 1. That gave me a minimum retracement area in the formation of that wave 2 between the fib level 0.5 and the fib level 0.618, which is a target area that lies between the $0.3913 mark and the $0.3692 mark. And you can see we have managed to get into that minimum retracement area in the formation of that wave 2, and that now means that there are chances that we might have bottomed out in the formation of this wave 2, and whatever we are seeing at the moment is the start of this impulsive wave to the upside in the formation of this wave 3, and sketching out a target area to the upper side in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1. then dragging the fips to the low of the second wave. That gives me a minimum target area to the upper side in the formation of that at the fib level 1.618, and that is at around the $0.6829 mark, and that is the minimum that we can expect Fetch AI to do in the formation of that wave 3 before we can expect a wave 4 and then continue gearing up in the formation of that wave 5 to the upper side. So that is what I'm expecting here on the short term scenarios. But in case we continue seeing a breakdown over here, we also need to be prepared for such a scenario. And in case such a move plays out and we continue seeing the breakdown, lose the 20-day MA, get back into our blue target area once more, and maybe even manage to break through this blue target area over here, then the next area that I'll be watching on the Fibonacci's is the fib level 0.78. So using the Fibonacci's once more, connecting them from the low of the first wave to the high of that wave 1, the next area that we need to watch on the Fibonacci's, in case we continue seeing the breakdown, break through this blue target area in the formation of this wave 2, then I'll be watching the fib level 0.78, which perfectly lies at around the $0.3387 mark, and that is the maximum that I'll be expecting that second wave to the lower side to do in case the breakdown continues. But for now, we need to have in mind that there are chances that we might have bottomed out in the formation of this wave 2, since we managed to get into the minimum retracement area between the fib level 0.5 and the fib level 0.618, and there are chances that whatever we are seeing at the moment is the start of this wave 3 to the upper side. And jumping to the 4-hour chart to take a look at the indicators, here on the RSI we are trading at around the 57 mark, meaning we have massive room for us to fully support higher prices in case the bounce continues. But in case the breakdown continues, that movement will still be supported on the RSI. Also taking a look at the MACD, we have been able to print a bearish cross, suggesting that there are chances of continuing to see a bit of lower prices here on the charts. So let's be patient and see how that plays out, and I'll be keeping you updated.